Good evening, everyone, and welcome to today's session on credit building. Thank you for joining live or watching the recording. We're glad that you're able to make it to this session. We'll start by acknowledgement. We acknowledge that Tribe Network is located in Mi'kma'ki, the ancestral and ceded territory of the Mi'kmaq people. And we also acknowledge them as the past, present, and the future caretakers of this land. And this land is also the birthplace of Black culture and heritage in what is now known as Canada, following the forcible displacement of people of African descent. Something about us for those who are interacting with us for the first time. Tribe Network is an entrepreneurship and innovation hub based in Nova Scotia. We are a community of Black, Indigenous, and people of color pursuing entrepreneurship and innovation in Canada. One of our main programs is the Black Startup Project that was created for Black entrepreneurs and business owners in Atlantic Canada to help them start, build, and accelerate their businesses. Through our programs, we deliver education workshops tailored to Black entrepreneurs, including live sessions such as these, led by successful Black leaders. In case you would like to know more about the Black Startup Project, please feel free to reach out to me or my colleague, Julia, who will drop our contact details in the chat. We also like to begin all our sessions with letting you know about the values that we would like you to present yourselves as today, which are lead with love, nurture community, inclusive leadership, and practicing creativity. We also encourage you to be as participative as you're comfortable with by joining with video or joining from wherever you are. We are looking for you to be more, will be a more of an interactive session, so we're hoping you'll be able to participate. I will now introduce our facilitator for today. We're joined by James Muhato, who is currently the co-founder and CEO of Wovio, a community wallet for savings and credit that seeks to broaden financial inclusion for underrepresented and minority groups in Canada, giving people financial security. I will let James continue with his introduction.
Hi, everyone. James Muhato here. I'm co-founder and also COO at Wovio. Very proud and very excited to be here presenting. We are a native PEI company. Started and founded in Prince Edward Island. And I also see Jonah Chininga, our co-founder, is on the call. But I am personally, very proud and very excited to be presenting to, one, my fellow Nova Scotians and Atlantic Canadians. But equally, I hope you're all safe and well following the snow that came about, this week. Just wanted to say hello and excited to jump into the presentation. Thanks. Okay, so again, really, today's presentation is about building credit history, and I wanted to take a different approach to explaining or to really diving down into credit history, what credit means, and really what factors come to deeming creditworthiness. Because at the end of the day, it is a matter of determining dependability and reliability for you to service or pay back a certain amount of debt that you're taking on. So it's almost a level of confidence from a lender. And so I came up with the topic of venture resilience. So taking a community-centric approach for credit when it comes to business or financial success. And breaking down what venture means. Venture can look at or can be defined as an adventure. It could be a new challenge, a new opportunity. It could be personal, it could be business, but essentially you're taking on an endeavor that on your part requires action and really substantial action depending on what challenge or what opportunity you may be chasing. It could be, as I said, personal, private, social. It could be tied to a business, entrepreneurship, but it's really going down or pursuing an activity. But resilience is a bit weighted. I know everyone talks about resilience in this day and age, and in my mind, what resilience is the ability to stick with something and the tools and the resources that you have not only within you, but from the environment around you that gives you the strength to stick with something and really stay committed to it and seeing it through. So you could have a venture of maybe I want to go for a walk every day, or I would like to start doing exercises every day. And resilience in that sense would be the ability for you to stick with it. Specific to this session, understanding that majority of you may be business slash entrepreneurs, the venture would be the business you're trying to pursue, and the resilience would be the ability for you to stick with it and really weather the tough times and the storms that could come ahead. And what I'm challenging today is a community-centered approach to approaching credit. Now, for a bit about myself, because I did say I'm James Mohato, co-founder and COO at Wovio. And really for the more personal side of me, I was born and raised in Kenya. I am the firstborn of three. And entrepreneurship is something that has been around our family for a while. My dad owned a business, and my first experience or adventure into entrepreneurship came from when I was responsible for stocking the shelves. So I had to do it in the morning and I had to do it in the evening. Then in between, my job was just doing inventory count. Very basic, simple, but it allowed for a high level of responsibility that was something I hadn't experienced until this time. But really that opened the door to show that you kind of get a certain freedom when it comes to entrepreneurship. You get to envision, but also enact your ideas into something that is of value, that adds value to people's lives to a point that they are willing to pay you for it. And that was the nature of understanding entrepreneurship. And I personally have a passion of being of service to my family and my community. I found that I am strongest when I'm serving and helping others, because by getting them to see the value or getting them to reach their measure of success, then I'm fulfilled not only one personally, but equally if there's an exchange of actual dollars, then I love getting paid to do that. So I do love working with individuals who see their vision of success become a reality. And on the screen there, you have the four co-founders who I was very, very fortunate, and I continue to be very fortunate to work with. We have Jonah, who's closest to me, Mary Heth next to him, and Sergio at the end. And these are the founding team of Wovio. Four of us decided over 2 years ago, oh no, sorry, 3 years ago, to start putting our money together, really to launch this venture, because we were all a team of immigrants, and we at the time were unable to access any credit from a bank or from any institution, and equally we were going into a space that was really risky. It was technology. It wasn't something that you had to, or you could save up to and just build as you go. It required substantial investment. So we were fortunate to raise the funds among our own community, or among the four of us at start. Then we were fortunate to raise venture capital more recently, and even this would be our second round. But very fortunate, and what I would like to emphasize is the team and the support that I've received from them. And when it comes to understanding credit and what we're here for today, I wanted to break it down from the perspective of the historical context and what forms your credit score and what it impacts in your life as you go towards pursuing or obtaining new forms of credit. So first and foremost, something you should understand about the Canadian system is that 1 in 4 Canadians cannot afford an emergency of $500. And some of you may be asking, what does this have to do with credit? But back again, credit, or your credit score, is a measure of credit worthiness. And this almost shows that about 1 in 4 are unable to access credit, just credit for emergency or credit for whatever circumstance they may be in life, purely because of the score that this comes along with. Secondly, there's about 23% of Canadians who fall below this prime rate of interest. And that means that for individuals with a score of below 720, they could be paying interest rates of 23% and above. The highest we've seen so far is at the 30% route from an official bank, but they do tend to go higher. And really, this is just, it costs you more when your credit score is lower in terms of debt. But for some generalities, in Canada, the credit score range is between 300 to 900%. Above 720 considers you a prime borrower, which means you fall in the most desirable category of people or credit worthiness that banks are willing to lend to. So they're happy to lend to you at the 19%. However, if you fall below that, so you're in that subprime region of 600 to 600 or 660 to 724, then you are likely to get charged a higher interest amount. And what I would like to do for this session is really dive into the components of credit. And so first and foremost, when you look at it, your credit payment history and credit utilization are the largest components of your credit history. Of your credit score. 35% of that is credit payment history. And this comes down to one thing. It's driven by your on-time payments. And this comes to when you think of a loan or you think of a form of credit, being able to make those payments every 2 weeks as scheduled or every month on a specific day as scheduled, but really meeting a commitment that has been set up in the agreement between yourself and whoever's been lending you that credit. It is one of the most, and yeah, by the mathematics, it is the most important factor of your credit score. Are you able to meet your commitments on a monthly or bi-weekly or weekly basis based on the debt you're taking on? Secondly, it's credit utilization. And this speaks to how much of the total debt you have available that you are actively using or that you've actively drawn on. Now, this is different. You could, let's say, have a line of credit or a credit card of $5,000 and you've only used $1,000 on it, okay? So that's 20% of your credit has been utilized. As an industry standard, and maybe this is a point of reflection, based on your total credit available, 30% is usually the industry comfort zone. So usually if you have debt or you have credit that's been made available to you, utilizing 30% of it is what's seen as a safe, dependable, or a safe and comfortable area by the institution. So let's say, back to my example of 5,000, if you were to borrow now 2,500, which puts you at 50%, you're above the utilization. However, if you only borrow 1,000, which is 20%, you're below the utilization that the banks and institutions are comfortable seeing. If of the 5,000, you use all the 5,000, then you are at 100% utilization, which is not seen favorably by institutions. Only to say that, yes, having credit is a good thing. How you use it and how you make use of it and turn it into something productive is really where the value of credit really comes in.
James, one question on credit utilization. Let's take the example you shared about $5,000 available through a credit card. If I'm only using 100, will that be taken as negatively because I'm not using much of the credit card, as an example?
It wouldn't be seen as negative, but at the same time, so when it comes to credit utilization on its own, that is one component. So they will see that you're falling under 30%. So in terms of, let's say, there are 5 conditions up here. So, sorry, I'll go back. Yeah, so there are 5 conditions. So when it comes to credit utilization, your weight would fall just a bit higher because it's within that region of where you're actually utilizing the credit, but you haven't maxed out or you haven't gone above the required threshold. So you would have about 20% to play in there. So if you're taking $100, then you still have a bit more that you can actually borrow before credit utilization becomes an issue.
But in the situation, let's say every month I'm only taking $100 and my credit card availability is 5,000, that won't negatively impact my credit score, correct?
All right. Now you've touched on something that's actually a recurring factor, which touches on.
Oh, my bad. Sorry.
This one here. No, man, not at all. Please, I would like this to be an open space. But you touched on it very well. And this comes to the next 3 factors that lend to your credit score. So in your example, you said, I have a $5,000 credit card, and every month I am utilizing, let's say, 10% of it, or 10%, which would be 500 at this point. Based on that, if you're doing it every month and you're actually paying this back every month, then the length of your credit history is really what's being built up there. What that is to say is that you are actually making the payments to sustain the debt, And based on you continuously doing it over a period of time, then you're able to actually build out your credit further. So in terms of components that add to your credit score, length of history will continue being built because it's based on a factor of time. You've been able to manage that $5,000, and your utilization score, it may not be the best, but it's in an ideal spot because you're only using, let's say, 5% of that at the 500. And so that's how all these factors really play with each other. Does
Very
that?
clear. Very clear. Yeah. Thank you so much.
No, my pleasure. And really, when it comes to the other three factors, you can see that they have a bit of a lesser weight. So if I start with length of credit history, this really touches on how you managed your credit and debt over a period of time. It goes without saying that if you are an immigrant new to Canada, then your length of credit history is already handicapped by nature of you not having data fed into the system until the point you arrived in Canada. And so a lot of times when someone will tell you you're not credit worthy or your credit score is really low, we can't give you a particular service. It really falls into the length of credit history sometimes. There's not enough data to make a decision. The other factor that comes into play is new credit, and this counts for 10% of your credit score. The one thing about new credit to really touch on is I've given the examples here. Depending on the form of credit you're taking on, or even sometimes just inquiring about a credit check can affect your credit. And so it really is a point of being informed of why do I need credit? How do I plan to repay it? And will it bring me continuous returns, or will it give me more value than the cost of the debt? And that really becomes an important factor, because if you have a low credit score, then the cost of you borrowing automatically goes up because your interest rate will be higher, versus, let's say, if you have an 800 credit score, your interest rate will be lower and you'll end up costing you less. And the last component of your credit score is a diverse credit mix. And really, this speaks to having the right mix of different forms of credit or different types of debt, as for you, either as an individual or as a business. And really, it matters on, is this debt being used productively or unproductively? And really, just to walk into this or to walk through an example, I wanted to pass this back to the group to really know, we have two people right in front of you. We have Maria and we have Marcus. And both of them have the profiles of credit or debt that you have in front of you. And I would love to ask you, who do you believe is more creditworthy? They can leave it open, or please throw it in the chat. I'd love to know what factors, or how would you go about maybe thinking Marcus is more deserving versus Maria, or Maria is more deserving of credit versus Marcus, and assume they're borrowing the same amount. Okay, I'm seeing Marcus from Johan, Marcus from Arjun. All right. Okay. So it seems majority, or so far, Marcus seems to be there. Sandra, it'll be good to see. Okay. Because Sandra doesn't want to make a bet. All right.
James, one question.
Mhm.
Shouldn't you also include the years of the mortgage that Marcus has?
Yeah, we can
Or
include
that
that.
wouldn't impact anything?
Maybe I can ask one more thing. Is there anything that you would want, if you were the loan officer, that you'd want to know about these individual people? I think one has been raised. You'd love to know how long the mortgage is for. Anything else? Going once. Age, okay. No one has asked about where they're staying, because I was going to say a mortgage in Toronto versus a mortgage in good Halifax is a bit different. So it's very interesting. But to end this exercise, one thing, and even Johan touched on it, on, okay, why would you be increasing your credit, is to point out that sometimes, as much as data may be aligned, a lot of the reasons credit might be denied is because of nuances. And so when you're giving someone a credit score, you're just giving them a number to determine creditworthiness. what feeds into that number is what's really important and what really should be considered. It is a thing of pride that with Wovio, we consider ourselves an alternative data furnisher, meaning we don't use so much of the traditional data to feed into your credit score, but we use more of a modern approach of thinking about what information would be valuable to determine an individual's creditworthiness. And you're all very right. One, it would be really good to get some age information, household information. Where are they located? Why would you ask for more credit, or why would you ask for a credit increase? I don't know if anyone noticed there, but Marcus has more than one mortgage because I put mortgages in there. So it would be interesting to know how many property he might have. But all of this to say is that there's no wrong answer in this, really. Being able to get nuanced information and really knowing Marcus or really knowing Maria is what allows you to make creditworthy decisions at a more accurate level for the individual in question or the business in question. It really is a matter of how much good natural information can you accurately hold on an individual or have on an individual to determine that. And why this becomes important is that basically, if we're looking at the example of Marcus or Maria, or even you sitting in front of me as a business owner, $5,000 is really the average amount, or let's say it's a low amount for a business to borrow to really get started. It's really that friends and family Kickstarter amount that allows you to invest in either buying some inventory, buying a business license, launching a marketing campaign, or getting some raw products. And if you were to pay an interest rate of 19%, which is really at the prime and above, so you have a credit score of above 720, 19% on average is what you'd be paying for credit card. If you were to make your monthly payments, so the minimum monthly payments of 250, then you would pay interest of $1,000 by the end of the loan. If you were to do the same thing, but instead pay 350, so the second option there, you would be paying an interest of 713. So just by upping your monthly your monthly payment by $100, you're almost erasing $300 in interest. Now it gets very interesting when you're paying $500 a month. And at that point, your interest goes down to $486. And that really shows that, unfortunately, it is a bit expensive to make smaller payments in the end run because you end up paying for it in interest either way. The analogy, unfortunately, is that it's expensive to be broke because, unfortunately, when you're cash strapped, then you end up being, or those terms of your credit end up getting drawn out longer, in which case you're paying for your credit for a lot longer with high interest rates. And what this really looks out when you draw it out into a period is that if you're only making your $250 payments, then you fall into option A. Option A means that you will pay off this debt for 2 years. In total, you will pay interest of about $1,000, and the total amount of credit that you'll pay back is $6,000. Now, what happens if you're paying 350? If you're paying 350, all of a sudden you're only paying this off for 1 year and 5 months. The interest you will pay is $713, much less. And equally, the total amount paid would be $5,713. So basically, you're saving about $300. And that's really, so around that $300 mark compared to just making the minimum payment. Now, if you were to pay $500 a month, and $500 I know might be on the higher side considering you're taking $5,000 in debt, but if you were to pay off, or if you were to have a debt of $5,000, paying $500 every month, then it would take you 11 months to clear that debt off. Your interest, though, would still be $486. So you will essentially be adding just 1 extra month. So it'll take you about a year if you borrowed from a bank, where you'd be making payments of $500 for the whole year straight to pay off the debt. Now, if I was to switch gears and offer a community-centered approach, then I would proposition Wovio. And that's because at Wovio, what we do is we take a cooperative model of savings and credit on using technology that allows communities to pull their resources and distribute it among their members. what it looks like at the end of the day is table banking, which if you're, depending on which part of the world from, you may be familiar from different names. I'm from Kenya, so we call it a chama or merry-go-round system. Somalia, Sudan, call it Hagbad. I believe if you're from the Asia, China region, they call it Hue. And if you're from the Philippines, they call it Polywagon. It's a system that's practiced all over the world, but essentially you're taking a group of individuals, a community, allowing them to pull their resources and making that capital available to individuals. So on your screen now, you have what it looks like if you had a community and you were pulling these resources among your individuals, so 10 people. So we're taking the same mathematics of $500 a month, circulated and pulled among 10 people. If you were to do that, then each month for each of the 10 people to get paid back, it would take 10 months. That means every month you and 10 friends or you and 9 other friends come together and put $500 in a pocket. One person gets that capital and they're able to go and spend towards whatever business initiative they had or whatever venture they wanted to go down. Opposed to traditionally, where you would go to a bank, same situation, you're borrowing $5,000. It takes you 11 months to pay it off, as we showed in the previous tables, and your monthly payments are $500 because it's really what we just went through. The difference being, if you, the same group of 10 individuals, were to go to the bank to seek out something like this, then the interest, which was 486, becomes now $4,000 among a group. And that $4,000 is literally, almost close to the amount of the loan and can go a lot further if invested in the group itself or in the business ventures of the individuals to actually let them see that reward. And the difference being with your community, traditionally, these systems don't charge interest. So you're saving as an individual $483. As a group of 10, you're saving $4,000 because the collective good is that 4,000 will still be kept within yourselves as a community or among yourselves as a community. And on the side there, you actually have a tribe community QR code. So there's a tribe community set up on Wovio right now that exists. It's managed by Tribe Network themselves. And the purpose of it is to actually support businesses and organizations such as yourselves or entrepreneurs in sustainably seeking small, manageable amounts of capital that allow you to drive your entrepreneurial vision further. There are things and there are amounts that fall outside of the range of funding sometimes. And really the question becomes is, what tools do you have available to yourself as an entrepreneur to really bring your vision to a reality? A personal story is that as Wovio, this is the system we used ourselves to fundraise. The 4 co-founders I showed you at the beginning, we each said every paycheck, we'd take $200 and we'd put it aside until we've built our first product, which was it was a web app. It didn't look as good. It wasn't pretty, but it allowed us to go in front of customers. It allowed us to go in front of investors and really have those discussions that drove our business further. I remember we set up our first Instagram account with it, and those were pretty amazing things. And so scanning the QR code and signing up will give you access to the Tribe community, and you can actually engage with other businesses and the Tribe team to really set up such groups for yourself and really start saving on that interest, not only for yourself, but for the community and the group that you work with. And what this really speaks to is solidarity economics. If this system sounds familiar to you, it's because it's practiced by 1.5 billion people around the globe. The system is called rotating savings and credit. What you're doing is a group of 5 or 6 or 10 are pulling their resources together, and you as a group are deciding how that capital will be allocated to each individual. The beauty of it is that, one, it ties social commitment. As a group of individuals who may be all entrepreneurs or all business owners, then you act as a peer support network for yourselves, not only with credit and capital, but equally to address some of the challenges that you would face as entrepreneurs, really providing that social support network. It allows for individual flexibility. So if 500 is unaffordable, then you can do a $100 group with 10 people. That means you have $1,000 pooled together. Or you could do a $50 group with 20 people, and then now all of a sudden you have $1,000 again. But it really allows for that economic flexibility based on your own capacity. The third reason is community impact. And for community impact, I just want to show you this slide. It allows you as a group of individuals to save on that interest. And that interest can itself be directed back into the values and also the mission that you are or that you're about, but also that's important to you. And that impact is really what we're driving for. That impact can allow you to have one additional marketing campaign. It can allow you to buy a bit extra inventory. It can get you into that sales symposium that you wanted to do to expand your business. It is money you're leaving on the table. And the reason why we started Wovio as a company is because we had a background, or each of us as immigrants to Canada had a background of understanding the pain points of moving to a new country, trying to establish yourself, and equally trying to live out your vision of entrepreneurship and business. On the left there, you have a WhatsApp screen. And traditionally, how these groups would have worked is you message members, you form different groups, and you start saying, okay, we're going to start saving on the 1st of January. Usually at the start of the year, because you have a New Year resolution and you want $1,000 or you want $1,200 by the end of the year. So you'll do $100 every month with some friends. Then as the year goes by, sometimes some people fall off, sometimes people stay on. And it really ends up being a system that is on pen and paper and a bit anecdotal. What we wanted to do was provide a digital solution to this. Why a digital solution and why now is because, one, the records allow us to build your credit history. And this means we have a working relationship with Equifax where we can report the data from our platform to them to allow you to build your credit history. So when it comes to measuring on-time payments, which we mentioned was the largest factor of debt, of your credit score, we're able to report every single time you make a successful contribution on time to the credit bureau. Secondly, when it comes to debt utilization, because you're only taking a portion or ever only borrowing a portion of the funds made available, then it really doesn't count, or you're utilizing a much lower portion of it because you're continuously being able to pay it back a lot sooner. The third thing is that because we have the data and the information around this, we can actually extend emergency credit. And so one of the pillars of Wovio's values is providing people affordable credit for emergencies when they need it. So by building a track record on the platform, we're able to extend $250 interest-free to individuals should they have an emergency. Now, that was the end of my presentation, but I would love to open it up for questions, really, because one, the approach we're taking is not new. However, within a Canadian context, it does raise some questions, and I'd love to address any questions that you might have. Secondly, I would love to explore some use cases, walking through some examples of how different communities have been using the platform that we've seen that I'd love to share with you as well. And then finally, I would love to gauge your interest in even participating or trying out one of these Wovio groups on the Tribe Network. And this is because in the essence of economic prosperity, what the system allows you to do is, one, not only pull and distribute that interest-free credit that can actually benefit your business, you're able to build credit history through these transactions. And should you should you have an emergency, then there is an amount of interest-free credit that's made available to you. And with that, I would love to pass it on to any questions, but really sincerely thank you all for your time this afternoon. I really do appreciate it. And thank you for that. Ooh. Okay, I'll open the chat for any questions. Oh, thank you, Adam. When they increase, that was just a question. Okay. I'd love to take any questions at all.
I could start with a question just to get everybody situated. Maybe you can walk us through what the application process will be, or the registration process.
Oh, awesome. Yes. Okay, so I'm just going to go to the sheet here. And so when you scan this QR code, it'll take you directly to a landing page that's specifically set up for the Tribe Network on Wovio. So everyone, once you sign up, and it's almost like having a private WhatsApp group or private Facebook group, only members of Tribe will be in this community. So you'll be actually communicating and interacting with other businesses or other like-minded individuals. That's one. The second part is that the registration process is very simple. We wanted it to be as minimal friction as possible. So you sign up with a first name, last name, and email. And after that, you do have to go through a verification process. Now, the reason you have to go through a verification process is because at the end of the day, we are dealing, one, with people's money, but secondly, trust. The verification process means that we can verify you are who you say you are. And most importantly, that you have a Canadian bank account, which means you're able to transact in Canada legally. And so as you're going through the application process, first, it's a basic registration name, email. Secondly, we want to verify your identity. And thirdly, is linking your bank account to be able to transact on the platform.
Wonderful. Another
Yeah.
question in the chat from Adam is, do you have some success stories that have come from using Wovio?
Yes. I think as I said when I started the presentation, I am truly like I'm truly humbled and truly proud to be like presenting to the Tribe Network, to be honest. We have a very good relationship with Tribe, and to the point that when we were starting our business, Tribe was one of the organizations that actually made introductions for us to investors. And how we got to that point was because we, as a company, were using this system. So Wovio would be one success. We put $200 every 2 weeks to get started. And instantly, as soon as we were able to make an investment, we made that investment right away. So the first one was, okay, we needed to hire a developer to actually get the platform together. As soon as we had enough money, we paid him 50% at first. Then we followed up with the other amounts. And as we were pooling this, it also allowed us to pay for marketing or to pay for flyers and attend events. And so Wovio is one success story that I will never stop championing. Secondly, we have been working with a Whole Women's Network group out of Ontario. And this is a group of mothers, women, mainly from, I guess, Western and Central Africa. And how they use Wovio is really to support themselves and their families, but also to supplement their income. So to support family, they use it as a savings tool, usually scheduling that individuals want to receive their payout right before the summer. And that's usually because summer is when kids take summer break, they're out of school, but equally all the camps and all the events that come in around summer activities raise expenses. So people plan this as a savings tool. Secondly, the Whole Women's Network, they use it as a business facilitation tool. So they have groups where only women who are entrepreneurs join them. And essentially, if you're a business, you join the group by saying, I am savings or I am in this group so I can get a business license. Also, I can buy some inventory. And they make it very intentional that they follow up with each one of the members to make sure that they're actually following through with the business outcome that they joined the group for. I'm proud to say that because of that, one of the members was able to sell her distribution rights for her product to members of the community itself. And this was an instance where I have a business and I'm selling rights to my business to members of my group. So the benefit is not only serving me in receiving that capital, but in members of the group in receiving that continuous revenue stream as I sell, because they have distribution rights. And right now you can only work in the Canadian dollar. But yeah, stay tuned for that one.
I could add another question. How does the Wovio platform help in somebody actually building their credit and their credit score? Is it something that is reported to the credit bureau?
Yes. So we have an agreement with Equifax, who is our data. So we are a data furnisher for Equifax. And essentially what we've done is we've taken this traditional system and broken it down into the components of a loan. So your principal ends up being the lump sum that you would usually receive, or it ends up being the amount that you'd receive in credit from your community. The length of credit history or the length of the group ends up becoming the term duration of your group. So basically, how long are you willing to, or how long are you in the group until everyone receives their cycle of payout? If you're in a group of 10 people doing monthly, then it's 10 months. If you're a group of 12 doing monthly, it becomes a year. But if you're, let's say, a group of 6 doing it bi-weekly, that becomes 3 months. So it becomes a factor of the length of the group and the number of cycles that will be happening. And then the minimum payments end up being your contributions on the platform, but these are the payment amounts that you would be usually paying to the loan or to facilitate the loan. And so we broke those components down and structured them in the reporting format of what a credit facility actually is.
Thank you, Jane.
No, my pleasure. If I can come back to one thing, it's really to say, so the value of such a system is at the surface is that you're able to borrow capital from your social network, and it's interest-free. Secondly, you're able to build a credit history by using the platform because the transactions for on-time payments are reported to a credit bureau. And thirdly, that because you have this information or because this information exists, we as Wovio can actually extend emergency credit. And this avoids you from going to your credit cards. It avoids you from going to a payday lender if you're in that situation, but it also really avoids you dipping into your savings. Again, this is interest-free emergency credit for you to bridge an emergency when it happens, but not costing you that much. Socially, what it does is it allows you and your community or your friends or your network to achieve financial goals together. The reason this is amazing is because it lends itself to building that community cohesion. The last thing, and it touches on what Katrina asked, is these groups are self-governed. So remember when we were going through the credit exercise of Maria and Marcus? If you work in a bank, then those decisions are made by someone in a head office that you don't know. When it comes to this community system of groups, the decisions are being made by your neighbor. They're being made by your coworkers. And so when it comes to that information that we were requesting, they are almost in the best position to make those decisions on behalf of them joining a group and actually trusting you with the confidence to be creditworthy. All right. I think Jonah has a question there. So raised hand.
Yeah, I actually have two questions. So the first question was, why would I use Wovio instead of a credit card? The benefits of credit cards over Wovio. And the second question is, within the group format, what happens if someone defaults on their payments? Yeah, those would be my two questions.
Yeah. So I'll say, okay, the question of credit cards, and I'm not bashing anyone who might work for a bank or anything. First and foremost, a credit card is a tool. It's a financial tool. It comes bearing interest, which is the standard of it. However, the benefit of you using your credit card, which has traditionally been, it helps you build your credit history, I believe is a thing of the past. So the benefit, I think the benefit of using a credit card is honestly that it builds your relationship with your bank. It's not something that I believe would directly benefit you. It more so lends itself to the relationship that you have with your institution. And it's only limited to that amount of credit. So it does handicap you. And I don't know how many of you have tried asking for increase of your credit card limit, even if you have been in good behavior, and seeing what that's like. Versus a platform like Wovio is one, you're almost saving and building up capacity for credit purchases or for the purchases that you would intend with your credit card. So the downside might be the timing that the credit card is, let's say, always available to you for the maximum amount. So you can spend, if you get a $5,000 credit card, you can go out and spend $5,000 the next day. However, the cost of that would be much higher. With Wovio and this platform, the interest rate is at 0. So you are not taking on any of the charges, and previously that was $486. So you're saving $486. Secondly, because it is a community-driven initiative, then if you, for any reason, were to miss a payment or to have any issues or challenges with payments, then you can literally reach out to your community admin and let them know what that reason is for. And through that, a relationship or an understanding can be reached, where you can now decide, okay, I will pay in a week or I will pay in 2 weeks, but I won't fall behind. And if you do fall behind, then there are systems in place. All right. And I think those would be the two biggest ones. I think sorry, John. Oh yeah, your last question, go ahead. Oh, you're on mute.
Yeah, no, I want to just mention, great point on that. Just wanted to also add on credit cards, because yeah, I've been through it with credit cards. So credit cards is one thing that is not a credit product as per se, because with the credit card, you can only borrow up to 21 days interest free. Right. And I think a lot of people, for me as an immigrant coming to Canada, something that I didn't know. I thought a credit card I would be able to draw down on the balance and then use it interest free before the interest rates are getting charged. And then the average interest rate on a credit card is 19 to 25%. So it can really add up. But I think that was one antidote, just kind of like around the number of days that a credit card allows you to have the amount that you need on interest-free basis. So really, if you look at the difference, it's not an installment loan. It's really more like a cash advance that you're just using, but you need to cover it with high interest rate.
And I think, yeah, flagging the one thing is that, yeah, once you pass that 21-day marker, then that debt starts coming in. So I know the question was asked earlier about credit utilization. You could see a lot of that credit available being eaten up by interest, because if, let's say, you use your $100 and you don't pay it back in 21 days, it becomes 119, then it becomes 125, and that just keeps eating away at the amount of credit that you actually have available. So interest eats away at your utilization score. And to the second question, so this system is, because it is digital, we, Wovio, are the ones that follow up with an individual who is unable to pay or unable to make their contribution. So in the example, let's say we have 5 people and one person, for some reason, is unable to pay in any cycle. Wovio will step in and meet their contribution commitment so that the group stays whole. And we're doing this as a nature of our relationship with the Tribe Network to ensure that any business that's part of the groups or any business participating in this doesn't feel that direct, immediate impact. That's if one individual has an issue. On our part, Wovio will follow up with that individual, and we've taken a very experienced, focused approach to our collections. As mentioned, we're a team of immigrants, so if you are unable to make a payment, let's say because you lost your job suddenly, or you have to send money back home for an emergency, or you are personally experiencing a medical emergency, either yourself or your family, then those are reasons that we consider making alternative arrangements to support you, because these are really the top 3 reasons why an individual, especially an immigrant, would be unwilling or unable to make a payment.
Wonderful. I thank you so much for taking us through that. I think we all have a very good understanding of the Wovio offering. But if there are any other questions, please feel free to put in the chat, or you can raise your hand, or you can unmute. I'll just give it a second or two. Okay, great. Yes.
Ooh, I can go. No, just a story on the credit card. When Jonah asked about the difference between using a credit card and maybe using a platform such as ours. If you have credit card debt at any level, this is something, and we were doing it before Wovio, where we literally, like 5 Kenyans. One of our friends had been in Canada much longer than us. He had like graduated, he was working, had a family, but he had credit card debt, and he saw the trouble that we were getting into with using our credit card. So he literally sat us down. And of the 5 of us, he was like, listen, we're going to do $100 every 2 weeks until the credit card debt is paid off, because the interest will kill us at the end of the day. And he was leading by example. And so what we did was we sat down. My sister, who's younger than me, was in the group, and he was the oldest. So he set it up that my sister would receive the first payout, then he would receive the last one to make sure that we stay accountable. And in between there, he literally said, you guys will figure yourselves out. And we did. We just said, okay, I'll take number 3. Someone said they'll take number 2. Someone will take number 4. And we ended up being able to pay off our debt, I think in a year and a half, just by using the system. So we made sure that, okay, every 2 weeks, we're putting $100 in. When you receive it, it goes directly towards paying off your principal. You continue to make those monthly payments on your own, but whenever you got your payout, it had to go to the debt. And what this means is that if there's a method of debt management called the avalanche effect, and essentially what you're doing is you're just knocking off chunks of the debt at a time continuously, and just like with a lot of dedication. And it's really, those savings were felt by us because we were able to pay off our debt sooner. It's a story I tell to this day because the 5 people in that group are still my friends. Like we still have conversations. It's no longer about credit card debt, but we still are very engaged. So that would be like my last story to show that yes, there's definitely a business outcome that can be used to support these groups, but also there's a social one that can support individuals at any level. Yeah. Yeah, all to say, yeah, please scan the code. Yeah, it would be excellent to interact with you. If you have any questions at all, I think my LinkedIn has been shared, and equally, I'm happy to circulate my email, which is on the last slide here. Yeah.
Yeah, if you are looking to discuss the partnership between Wovio and Tribe, please feel free to reach out to me or Julia. Our Calendly links have been posted. So if you want any other questions that you have, please feel free to reach out to us. Yeah, if there's nothing else, I think we can close the session. Oh, there's
Cool.
somebody that wants to see the code again.
Oh yeah, there we go. Awesome. And I think the last thing before we go, and I think it comes back to saying like kind of what was the gift at the end. Thank you for participating, those of you that were able to participate between Maria and Marcus. But equally, if you asked any questions, so we would, as Wovio, like to extend a 3-month offer to anyone taking part in this call. If you sign up before the end of, I think, in the next 24 hours, so basically this time tomorrow, by late evening tomorrow, 3 free months on Wovio to explore it and really just get that advantage of seeing what the platform's about. Really just giving you the chance to explore it risk-free. We do want to show that this technology, but also this system of finance and banking can really succeed here because there is really there's a crisis coming of affordability with high interest rates. So how do we support each other? But yeah, I think that's the end. Thank you. I can really talk all day about this.
Very well said. Very well said. Just some final thoughts. Please take a moment to review our feedback form that has just been posted in the chat. Would like your feedback about this session or any other sessions that you have come to. And yeah, thank you. I think that's all from the Tribe team.
Awesome.
Okay.
Thank you
you
very
so
much,
much.
everyone.
Have a good rest of your evening.
Yeah. And hope you all stay warm and no one is snowed in.